Going live. It says I am live, apparently. Let me know that I am live. That's what this is saying. So let's see what we got here. 9 on so far. We'll give it a few more minutes. I see some questions loaded up, but I'm waiting for confirmation that I am in fact live. Good, strong internet connection. Microphone. There it is. I am now live. Okay, let's look at some of the questions we have here. Could you please explain how the buyback tax works, who it is imposed on, and the conditions for it? It's imposed on the company that's buying back their stock. So if a company wants to buy back $1 million worth of stock, they would have to pay $4,000 to get that done. They pay $4,000 to the government. That's just on $1 million. So when you hear about $50 billion or $100 billion stock buybacks, whatever the price of the buyback is, excuse me, the tax would be charged on top of that. So in essence, it is a tax on the investor because we own the company. The company's buying back stock and has to pay this tax. We all other investors lose the amount of the tax because the value of the company is decreasing by the amount of the tax. That is the proposal that they're putting forth. I don't know if any of these things will come to fruition because Biden would have to win another term in November for any of this to happen. That looks questionable at this point. I do think there will be 3 rate cuts. I have a colleague who likes to follow capital markets. He seems to have a strong view that interest rates will rise. What is your view on this? Powell has basically said that the next move is not a rate hike, that the next move is one of 2 things. Either we keep rates the same, or he laid out a number of scenarios in which rates come down, but he laid out no scenario in which rates went up. So you would have to bet against the very thing he said he's not going to do. Well, which, I mean, you can say that inflation will reaccelerate, but you have central banks around the world that are cutting rates. So if we think that lower rates are inflationary, you have other countries that I guess would be contributing to inflation. Is the U.S. going to be the last one fighting it? I don't think so. Plus, if we look at CPI did come down in March over February. If we look past the first decimal place, if we look to the second and the third decimal place, it did come down. So there is information there. What are your thoughts on long-term investment opportunities in countries recovering from economic crises? I don't really care if they're, I mean, what would it matter? Argentina shows signs. Well, Argentina. Okay, so probably better context for your question is, well, what do you think of investing in countries, that may have a different rule of law as opposed to recovering from economic crises? Argentina shows signs of improvement. Promising sectors like lithium holds 20% of global reserves despite lower EV demand. What do you think about investing in such recovering countries? If you've done your due diligence, then sure. If you feel comfortable investing in a country where it is subject to changes in government that may overturn policies of a previous government, if it doesn't have a track record of private ownership. South America tends to have bouts of socialism here and there. So is there a possibility, even if an international company owns the lithium mines and has a license to operate in the country, that at some point their investment isn't nationalized? I mean, that is what you that is what you have to feel comfortable with, is that there is a long term, a 15-year plus plan in place for an investor. I don't know. I mean, I really don't know if that would be in the realm of possibility. Maybe it is, but I would say that would be the big thing that I would look at, especially when you're dealing with an operation that is, and there's no way around it. Lithium is not, and lithium mining is not environmentally friendly at all. Look what happened in Panama over First Quantum and their copper mine. The people basically said, no, we want the environment over the copper mine, and that's gone. So there's that risk as well, because lithium mining, I mean, go ahead and Google lithium mining and look at images and look at the destruction that it does cause. I think there's a couple of countries in South America that are already having issues with that. I wouldn't discount that. How do you know that no rate cuts are priced into TLT? Well, hang on. TLT is not a company. TLT is a portfolio that will trade pretty much at its net asset value, and this portfolio holds treasuries. That's all. That's all it does. Is just an easy way to hold on to a portfolio of treasuries that have a duration of about 16. There is no earnings per share. There is no multiple. There is no anything. It simply just trades at net asset value. So if you look at where Fed funds futures are, and it's pricing in, we see 2 rate cuts, then wherever the yield curve is, it's reflecting those 2 rate cuts. That's all we can say. We can say, oh, the market is wrong, yields should be higher, yields should be lower. But if Fed funds futures have 2 rate cuts priced in, that information is known to the market. It's not as if the whole market says, oh, we didn't know about that. Nobody told us about that. This is new information. No, we say if the information is out there and it's widely available for anybody to see, no matter what price we're looking at, the price is in. The information is in the price because it's widely known. So it's not a question of what would be the price if it were 2 versus 3. It would be, if we know Fed funds futures and we can look and we can see it has two rate cuts priced in this year, then wherever the yield curve is, it already knows that information. So we say that it's priced in because, well, it's already market information. So that's sort of how we know. Do you recommend investing in collectibles? I do. I do. It's a great way to turn your hobby into a long-term appreciating asset. But it's like anything. Should I invest in mining companies? Sure, but not just any mining company. You better do your homework and learn about mining companies. Should I invest in stamps? Sure, but you better do your homework and learn about stamps, and especially how to spot forgeries in that market. Should I invest in, what's the big thing that I see these days that are I mean, I've seen it a couple of times where people are making like thousands of dollars a month trading shoes, running shoes, limited edition Air Jordans or something like that. They buy running shoes and then they just hold it in inventory. They never wear these things. They'll buy them for $200 and then they'll sell them for $600. Well, why not? I mean, if you're into baseball or hockey, there are hockey cards, there's sports memorabilia, but again, you better do your homework and you better be able to spot a fake from a forgery. Wine is another thing that people collect bottles of wine, but you better know your wines. I just did an interview with a previous CFA, a level 3 candidate. And he just started a company called Drift Capital. Well, I shouldn't say he just started a company. He's been building this for about 2 years. Drift Capital. They invest in cars. They invest in collectible cars. It's a fund. They take on limited partners, and they then go out and they buy $1 million, $2 million, $3 million collectible cars. So the world of collectibles is huge. Comic books, whatever passion you have. I remember when I was young, I used to have an album collection, big album collection when albums were the thing. And there was one place in Toronto that you would go to. I forget the name of the store now. It was across, I think it was across from the Pizza on Yonge Street. Maybe somebody remembers this, but it was a big record store. And if you wanted to find like really obscure albums, like the Beatles' Red album on red vinyl, things like that, that's the place to go to. And I had a bunch of different albums at the time that would probably today be considered collectible, but I felt, well, albums are going to disappear, and I had an opportunity to sell my whole album set to a collector, so I did. But I think, well, what would that be worth today? I was a big Beatle fan back then. I had every kind of record album, and the album covers were also collectibles as well. So yeah, collectibles are huge. They're big. Where did we leave off there? Let me scroll back up. If you aren't measuring yourself to a benchmark, how do you come up with the spread over the risk-free rate? Well, private assets or private funds usually use an 8% hurdle. So if you invest in private equity, you don't get units of fund. You usually get 8% convertible preferred shares that roll up. In other words, you'll get the cumulative 8%. So before anything can be bought out after a distribution in the capital structure, all the preferred shares have to be let me just do something here. I put my two phones on top of each other. Now they want to talk to each other. The preferreds all have to be bought out, and they're bought out at 8% cumulative. That's how you get that hurdle rate, getting past the 8%. If there's nothing left after buying out the preferreds, then there's nothing left to distribute. So you can think, well, 800 basis points is, if private equity is doing that, 800 basis points seems to be a hurdle rate that you should be doing better than 800 basis points. But I seem to think that you should be able to do the risk-free rate plus the spread. Put whatever spread on it you want. The riskier you invest, the higher the beta that you invest in, the greater that spread should be. It should reflect your risk. But if you don't have a benchmark, then you have an absolute return mandate. Absolute mean you want to make money in every market no matter what. So your benchmark should be an absolute benchmark, not a relative benchmark. Is there a place where the Fed account balances are graphed over time? I have a hard time understanding which accounts are mostly affected by the runoff. You can try Fred and look for a particular series like the TGA or reserves or reverse repo. You can look on Fred to see if Fred maps it out for you. Can't see why they wouldn't if they graph it out over time. Understand that the balance sheet is pretty simple. If assets decrease, liabilities have to decrease. And the biggest liability is reserves. So usually it's a 1-for-1. If you have assets dropping, you'll either have the reverse repo or reserves dropping. Usually that's the case. So because if the Fed is not stepping in to buy $40 billion worth of treasuries, somebody else has to. And all the money out there is in the banking system in some place or another. It's all in the banking system. You may not think it is, other than cash in your pocket. Everything else is in the banking system. So if the Fed is not going to buy those 40 billion, somebody else has to, which means 40 billion's got to come out of the banking system. So reserves then drop by 40 billion. Give me a second here. There, maybe that'll work. Thoughts on some coffee being removed from CPI. Will this be thoughts on some coffee being removed from CPI? Will this be a big deal? What's the weight on coffee? I mean, what's the weight on coffee? I don't know. First I'm hearing that coffee is being removed from CPI. In your response to the weekly vid, but I may as well ask here as well, regarding your TLT puts, why are you so set on $1.30? Is there any particular reason? No particular reason. I saw it weak that day. I saw the price and I said, well, maybe there'll be a little bit more weakness. I looked at the delta. I thought, well, if we get another 30, 40 cents weakness, this is where it would put the 89 puts. Let me put a bid there. Let's see if we get them. I did not get them. But, you know, I was looking at the weakness and I thought there might be a little more. There wasn't. Canada has some stronger economic data on Friday. Helped Interrent and Cap go a bit lower. Canada had some stronger economic data. It helped Interrent and Cap REIT go a bit lower. Oh, I think I see what you're saying. Because of the strong data, that we might not get the rate cuts, or rates would be higher for longer. So the present value of the future net operating income would come in lower. I guess you could attribute some of the weakness to that. REITs are very bond-like in their pricing. The Canadian REITs, other than I'll fix this eventually, other than Northview, have a low enough payout ratio so that they still will have some equity behavior, but will behave more like bonds. So yeah, I guess some sensitivity to interest rates in the price is not out of the realm of consideration. It would be nice to see this week probabilities of a rate cut in Canada being cut to zero, and have these REITs sell off. That would be nice, because I would like to buy more. I just, when you see the price go up, you say, I wish I would have bought more then. So you hope the price will return to then so you can buy more. So if I get some weakness in the Canadian REITs on the residential REITs this week, I'll take them. I'll take them. I got patience. I'll take them. I get my rent check on the 15th of every month. I'm good with that. I deferred my May level 1 exam to November. How should I approach the preparation? Well, not the same way you did for May. How's that? I mean, if you deferred from May to November, you weren't happy with your progress, don't do the same thing again. Whatever that was, don't fall into the trap of thinking, well, I got lots of time. Can you make a strategy video? Not really. I really don't do any work in level 1 anymore, so it's not really my thing. What do you think of the practical modules? Well, I don't know. The feedback I got from one of them, the Python one, was that you could probably learn more on YouTube in a weekend than you could learn going through what's online. So it's not challenging, right? It's not fulfilling from what I can understand. That if you can do better on YouTube on a weekend than what they're providing. Now, I've only heard about the Python module. I haven't heard anything about the financial modeling. But even there, a 3 spreadsheet model is the simplest one that you can do, and it's a matter of coding in your functions. Cost of goods sold is a function of revenues. You got revenues growing at 6%. Cost of goods sold is a function. You'll have very naive statements being done after that. you build, it's really all in the assumptions. So you start with a whole bunch of assumptions, and then you say, okay, well, how do I build this model? Well, I mean, if you know how to work with Excel, you can build your own model. It's just a matter of what are the relationships between the variables. But everything comes down to your assumptions, and your assumptions are on page 1. And your assumptions are not, you don't hard code your assumptions into all your calculations. You have cells on page 1 where all your assumptions are, so you can do sensitivity analysis. But everything comes down to your assumptions. And I guarantee you, for everybody, your assumptions are wrong. Some of them will be right. Some of them will be wrong by a little. Some will be wrong by a lot. There you go. That's what you'll come up with. Do you consider yourself a patriot? Patriot of what? Isn't that an American thing to say? You patriot, you patriot. Isn't that more of an American thing to say? I've never heard that said in Canada. I'm a patriot. Patriot of what? Exactly. Well, we don't have, the we're number one thing like Americans do. Well, I don't know that anybody in Canada has ever walked around screaming we're number one. There is excessive identification with the nationality in America that I don't think exists in many other countries. Japanese people aren't walking around screaming we're number one. Costa Ricans here are not walking around screaming we're number one, but I think they know they're not number one in anything. So I think that they're sort of resigned to that. We're number 927. So I don't know that is a question that applies to anybody else other than an American. And I think today the word patriot simply means, when you ask somebody, are you a patriot? I think what you're really asking is, do you believe in the same things that I believe in? Because if you don't, then you're not a patriot, right? So patriot of what, I guess? Why no sunset recently? Rainy season. It's just cloudy. It's cloudy and the mosquitoes are off the freaking charts. If I sit out there, I will be ripped apart. I'll be ripped apart in no time. They are brutal, and there are hundreds of them, and there's nothing you can do. Even just being in the kitchen with the, I got sliding glass doors, they're all open. I get ripped apart. So you have to hide in specific rooms to avoid the mosquitoes. So June 19th, I'm going home for 3 months. I'm going back to Canada because I still have a house there. I'm going back to Canada for 3 months because I have no mosquitoes. And I have a great backyard, and I got a full gym in my basement, full commercial gym, and infrared sauna. I'm all set up there. So why would I sit down here with no sunset, with rain every day, mosquitoes everywhere? And let me tell you about the frogs and the toads. I have a stream that runs through my house, and last night there was a frog in there. I had to fish the frog out and get the frog, because in they go, and they're loud. And went outside last night because this one toad that was super loud, couldn't find the friggin' thing, but the cat that has decided to move in went running into the lawn, and you just saw all the toads just flying out of the way. I just saw legs flying everywhere, and they're loud. Why the hell would I want to stay here for that? I'm going home. That's why there's no sunset, because there's no sunset. What are your future projects for the applied level in terms of new sections? I don't know about new sections other than new content. This fall, we're going to do a more detailed spreadsheet model. And I don't really see the need to build a new model. Aswath Damodaran has a great model that he provides for everyone. It's a great spreadsheet model. I've looked at it. It's complex, but it's a great spreadsheet model. So what we're going to do is start from scratch and rebuild his model. I think it would be a good exercise to rebuild the model, to look at how everything comes together, because it's a great model for a retail investor. A nice, simple model, but informative and good, where it gets all your assumptions out. And that's the important thing in analyzing a stock. It's not so much the target price you come up with, but it forces you to think about your assumptions. And if your assumptions are reasonable, or if after you make your assumptions, you say, well, hang on a second, to get to where I want to go, there would have to be almost 100% growth every year for 20 years. Well, that's not reasonable. Suddenly you start to say, well, I got to change this and I got to change that. But it's a good model, and I think we should use that one. The work in financial modeling is not the spreadsheet. You need the tool, you need the spreadsheet, you got to build that. But it's in the assumptions. All the work goes in the assumptions, but until you build the model, you're not going to see how the assumptions flow in. We're just going to use that. Also, in the portfolio construction module this fall, I will be posting my trades. What trades that I'm doing, everything that I'm doing, and why I'm doing it, what my thinking is for doing it. And I'll show you what a trade plan looks like. It's not a matter of looking at something, say, oh, I'm going to do this. It is well thought out. I know what my entry point is. I know why I want this thing. I know what my story is. I know what the threats to my story are. So I know when it's over. So I think selling puts on GM makes a lot of sense, but you got to watch the level of incentives. You have to watch the level of inventory and the level of incentives. And there's a great website that, unfortunately, it's only once a month, but they update the level of inventory out there, so you can see where the higher inventory goes, the higher incentives go. So incentives are like the auto industry's version of dynamic pricing that Tesla would use, for example. If incentives go too high, then I'm no longer interested in GM. I know what my exit is. I know when my story is over. So that's what I'm going to do with every trade is I'm going to say what it is that I'm doing, what my plan is, what my initial position is, because I never take a full position. I really should start taking full positions, because by the time I really want a full position, the bloody thing moves on me. But I never really take a full position to start with. So I will explain how I will add to my position, when I will add, under what conditions I will not add, and what my expected holding period is, or my target price. So when I had the home builders, I thought, well, it'll be 2 years, and I think I can get a 30-40% price increase out of them over 2 years. That happened in 3 months. It's like, wow. Everything seems to happen right away these days, but I will post all of those. I will continue with the industries. I'm doing the automotive industry now. That should be up next week. I think the macro reports, how do you read PCI, PCE, jobs report, industrial production, how do you read all of these reports, I think is important to have. So I'll continue with those. Along those lines, I think probably an interesting one to do would be payments, and all of the different payment methods that are out there and where the industry of payments is going. But I'm just going to keep adding to it. I don't know about any new sections, but anything I add will go into one of the 3 sections. Let's see. What does people focus on? Earnings, beating expectations, forecast, rather than the actual number itself? Because the market prices in expectations. We price in our best expectations of the future, and if we expect a company to earn $6 a share and it earns $6.50 a share, it's higher than our expectations. It's higher than what the market expected. And again, how do we know it's not priced in? What we just naturally assume is that any information that you know is already in the price. If you know it, if it's out there, if it's public domain knowledge, it's already in the price. If you know something that somebody else doesn't know, well, that's where you have an advantage. That's called alpha. You have information that nobody else has, so it can't possibly be in the price. You can have a different opinion than somebody else, but what you're saying there is that the current price is wrong. It's not that the current price is not reflecting all the information. It's just the current price has no reason to reflect your opinion. It reflects the opinion of the market in general. So if you come across a story out there and you read it and you look at a price, you go, oh my God, why is the price where it is? It's all, everybody knows it. If you're reading it, it's already there. So you can say, well, if the price is there with this information that I just read on Reuters, then that's the price. That's the price. Inside information is legal if you act on it. Information that is unknown to the market, if you're not an insider, is a gray area. That's alpha, right? So if information comes in that is more or less than what everyone expected, that is incrementally new information. The price will adjust to reflect that. If we're using leaps as a stock replacement strategy for long-term holds, how would you implement this strategy when the goal is to hold the stock for 20, 30 years? Well, you have to keep rolling over your leaps. So you want to get them free. How do you get them free? Is you need to sell a put to pay for the call. And if you get them free, by the time of expiration, the most you'll lose is the carry. The higher the interest rate, the more expensive that strategy is to do. But the higher the dividend, the cheaper the strategy is to do. But you lose the total return because you don't have the dividend. Leaps are great when you have very low interest rates. Leaps are not so great when you have high interest rates, because here's what happens. You paid for a call at a high interest rate. As interest rates come down, let's say over the next 2 years, as interest rates come down, the price of that call will drop, even if the underlying stock is going up. The interest rate component will bring the price down while Delta brings it up. You could not make anything. You could have been right in your direction, but because you were short the interest rate, you were long the interest rate and the interest rate was dropping, you lost money. So when interest rates are high, options, longer dated options become a tough game to play unless you can structure it in such a way as to get it free and you're comfortable with it. Which means if you have negative carry somewhere, you try to look for positive carry somewhere else. Question about interest rates in Canada. Do you think BOC will follow rate cuts in the US? No, I think which one? Which debate? There's a lot of debates about how it's not representative, or it doesn't measure what it's supposed to measure. Does not matter. That's not the point. It doesn't matter. The point is not the precision of the index. The point is the direction of the index. The precision. If we say, well, a basket of goods that cost $100 20 years ago costs $300 today. Who cares if that's right? It doesn't matter if that's right. What matters is if you measure it the same way every single time, you'll be able to tell whether the price is going up or going down. It doesn't have to be the right absolute measure. It just has to be the right relative measure. So to say that it's not representative, number one, CPI is not meant to be representative of the way you make decisions. That's PCE. There is a chain CPI that attempts to make to control for the way you make decisions, and we see the chain CPI comes in lower than CPI. All of these are statistical tools that suffer from sampling error like any other statistical tool. So you have to use them given their limitations and understand when to use them. If I have a broken scale, it will not tell me my weight. But from day to day, it'll tell me whether I'm weigh more or less. It'll give me my relative weight. So if I'm trying to lose weight, the scale will tell me that my weight is going down, but it may not tell me what my exact weight is. That's what we can usually try. The value we can get from statistical measures is we're going to have some sampling error in the absoluteness of it, but much smaller sampling error in the relative difference between two measures that are measured the same way, right? So I think the debate around CPI kind of misses that point. Can you sell that hat as a flat brim First of all, I get that some people like to wear their hats flat peak. That's not what this is. Okay, this is classic, a classic style that is not subject to the fashion of the day. This style will always win. This is, as far as music goes, this is Louis Armstrong. This is Pink Floyd. This is Led Zeppelin. This is not Beyonce, which in 20 years no one will listen to because it's pop music, it's fad music. So no, I cannot do that because it would make me less of a real man. What do you think of that? What do you think of that? No, I can't sell it as a flat brim hat only because I disagree with it. Can we use 2024 materials and lectures for 2025 curriculum? If you're doing level 3, the core, yeah, 90% of it is about the same, few changes here and there. As far as level 1 and level 2, I don't do that stuff anymore, right? There are other people that are doing level 1 and level 2. Probably they're the better ones to ask. I haven't looked at the level 1 curriculum for 2025. I couldn't tell you what's new in that one. I have migrated all the way up to just level 3. Do you eventually plan on covering all subsectors of the market? I do. I would be interested in a breakdown of the restaurant industry. Well, with restaurants, there are, you're limited to what's publicly traded. So what is publicly traded are more the they don't like to call it fast food. What do they call it? Fast service. The fast service establishments. Yum Brands and things like that, McDonald's. A lot of the restaurant industry that exists today out there in the world where you can go to, 90% of it is all privately owned. So you are limited really in an analysis of that industry to what is publicly traded. And because of that, you are really talking about restaurants at scale and restaurants that predominantly are chain restaurants, predominantly are going to be significant chain restaurants, Ruth Chris, Shake Shack, things like that, right? So I don't know that when you say the restaurant industry, if you mean the publicly traded, then yeah. But if you're looking at getting into the restaurant industry, I don't know that the publicly traded chain restaurants are a good benchmark for what you would want to do. Can we explain exchange rate targeting between countries using real exchange rate? Tried doing it, but results are opposite to the readings. Oh, well, I mean, what theory? There is a theory saying if you see this, it should go up. There's another theory saying if you see this, it should go down. There for every event, there's multiple theories in Forex that says it's going this way, it's going this way, no this way, no that way. So when you say you're getting what theory, based on what theory, right? The most common pricing, or at least I shouldn't say the most common, but the most recognized pricing is relative purchasing power parity, which is a mid to long-term pricing of currency in terms of differentials in pricing levels. That's sort of an equilibrium model in currencies, which holds in the long run, but that's not helpful because when is the long run? At what am I in the long run today? If I was looking at something 20 years ago, is it not the long run today? It seems that every day the long run gets pushed one day ahead. So currencies are notoriously difficult. That's why you have theories that survive that say exact opposite things of each other, because neither one can be proven wrong. Neither one can be proven right. They're both right and both wrong, depending on what happens. Right? So I can't answer that question because I don't know. I don't know what you're referring to. Which model are you referring to? How do you spend your free time? Do you have any hobbies? I don't know that I have hobbies, and I don't know that I have too much free time. And free time, if I'm just sitting around saying, well, I need to kill some time, usually I just kill it on YouTube, find something. Carvana, 52-week low, 10.16 currently. Oh, no. Wait. Looking at Carvana with a 52-week low of 10.16 on currently at 117. How do you start? By rationalizing and analyzing potential short candidates? Well, Tesla was easy. Because if you separate Tesla you start with it as a car company, because, well, what 87% of its revenue is automotive. Start with it as a car company, and just a car company. Strip out everything else. As a car company, it is massively overvalued. I mean, it should have a market cap of 25, maybe 30 billion as just a car company. A car company that is going to be buried in competition, and a company that has gotten lucky in that it became profitable at a period of time when a pandemic hit and the auto industry was characterized by undercapacity. And it got famous in that realm. Previous to the second quarter of 2020, Tesla was an unprofitable company. Had the pandemic never happened, it's questionable whether they would have become a profitable company, or at least certainly not as profitable as they became. But the auto industry is characterized by overcapacity simply because of the high structural costs. You have to produce units. To keep your average cost per unit low, you have to produce units. It's characterized by overcapacity. They've not had to compete in the electrical vehicle market in overcapacity yet. They haven't, and they are going to suffer the fate of every auto company in the auto industry. They will have auto industry margins, period. There is no way around it. There's going to be more EVs simply because both emissions standards and mileage standards are increasing. The car companies will have no choice but to put out an EV, whether they make money on it or not, because losing money on the EV will be preferable to the fines they would have to pay if they don't meet those standards. So you can get hit with $1 billion of fines, or you can lose $500 million on your EVs, but EVs they will make. Because it'll be the cheaper way to go. So as a car company, Tesla isn't worth that. It was easy to figure that out. Then you just have to think about, well, what about their other businesses? Are they worth anything in terms of their other businesses? They have the supercharger network, but wait, they just laid off the entire team. So that's questionable whether they even have that. Autonomous driving, but you got to get to level 4 to get rid of that driver. If you want these robo taxis driving around, you got to get to level 4, and they're not at level 4. And you have increasing regulation coming into that space. You have probably a hesitancy from the insurance industry to insure a whole bunch of individuals on this. So I look at that and I go, that's decades away. If they would lower their focus and instead of trying to be everything all at once, slowly, incrementally increase the geographies at which they're level 3, and then slowly within that increase the geographies of which they're level 4, like everyone else is doing. But they're saying, no, we want the world. we're going to make the whole world this right away. That's not going to happen. That's just not going to happen. So, I mean, that was easy. If you're looking at Carvana, we are moving back to an industry of overcapacity. More companies are using an incentive of low lease rates to push out leased cars, because leased cars, the consumer is more loyal to the brand on a leased car than they are on a purchased car. Believe it or not, it's better for the car company to lease you a vehicle because there's a higher probability you'll release the same brand. Tesla, I think this weekend just announced 0.99% financing on the Model Y. You can do a lot with leasing, but that means there's a lot of off-lease vehicles that are going to be coming out. There was one video I watched where it's this guy who he's really big used car space. He goes to auctions all the time, and he has videos of what you can get at auctions. He's really big on that. And his last one was, you're not going to believe, he says, here's the auction parking lot. He says, I haven't seen this for years. There's not a single spot available. Every spot is full. He says, I haven't seen an auction this full in years. And here it is. The auction is full. He says, you're looking for this kind of vehicle. He says, 2 years ago, you couldn't get this vehicle. He says, and he showed his camera down the line. He says, look at them all. He says, just look at them all. That the inventory is piling up, which means prices would be coming down. If you're looking at Carvana, you're probably going to want to follow the Manheim Used Car Index. Let me give you another site that's really good to look at as well. vAuto. By Cox Automotive, vAuto. They give you supply days of new vehicles. Every month they give you the average transaction price, the 3-month sales trend, the cost per holding a new car, the number of days of supply, and then they show you by model, by brand, who has the most days of supply. It's a great little site for an overview. As the supply begins to increase, it puts downward pressure on used car prices. Now, that doesn't mean that you can't make a profit. I mean, if the price of the vehicle goes down, but the wholesale price goes down, if the delta remains the same, you can still be profitable. But I think gone are the days where, used car prices, sometimes you could sell your used vehicle and get more than what you originally paid for it. Those prices are coming down. I mean, you can start with that. You can start and look at the trend of where inventory is going, and it's going up, which usually puts downward pressure on pricing, which puts downward pressure on margins. Typically, lower priced vehicles have lower margins. But yeah, that's where you would start. I don't know Carvana in detail, so I couldn't really say much about it. I heard an argument that it is higher for longer, so no more rate hikes, but also no rate decreases. I disagree, but well, that's what makes a market. You're going to have some people who say rates are going up. You're going to have some people who say rates are going to stay where they are. And you're going to have some people who are saying the Fed will have no choice but to lower rates. And I've heard all three arguments, and there they are. You just have to have yours, what you believe in, and there you go. Don't second guess yourself just because somebody else has a different opinion. You know, if you put in the time, that's your opinion. What do you think about Steve Forbes delivering breaking news? So Forbes has a very ideological perspective on things. I think if we're looking for confirmation bias, I think he's the embodiment of confirmation bias. I mean, I've listened to some of his videos. Sometimes I think, are you saying it because it's true, or are you saying it because you want me to believe that it's true? I don't know that this is true. Um, yeah, I don't know that I would that I put much stock into what he's saying, but I believe you mentioned that you have a sizable long position on Canadian apartment REITs. Well, not as sizable as I would like. I got 28,100 shares. Has that changed? No, I'm looking to add to it. If not, can I know the assets that you have in that sector? The assets that I have in that sector. What do you mean by assets? You asked me if I have a position in CapREIT. I said yes. Then you say, well, what assets do you have? I just doesn't your question sort of answer that? I guess I don't understand the second part of that question. Are you a Leafs fan? Not really. Would you buy puts on the Leafs? Has the recent change in projections for compute and energy requirements for building AI infrastructure further strengthen your thesis on copper? Well, anytime you need to move an electron somewhere, it's got to be copper. So if you think that more electrons have to be moved around, you need more copper. There is no way around it. Aluminum has attempted to provide itself as a substitute, but it's slower than copper. It heats up. You need thicker cables if you're going to send as many electrons as you can on copper. Nothing beats copper. So you're going to need more copper. Anything that increases energy, or anything, I shouldn't say, you don't have to increase energy, you just have to move electrons around. So if you're not moving carbon molecules around or creating energy from carbon molecules, you're moving electrons. Anytime you move electrons, you need copper. Does the Fed try to follow the market expectations of written? No, not really. I don't think it cares about what the market thinks. Just curious why you think QQQ consistently outperforms SPY over the long term. Is it because it is more concentrated? Well, QQQ is more concentrated in technology, far more concentrated in technology, which is probably why, because it's growthier. It has growthier stocks within it. Is there a chance that rates will only go down to and stay at, say, 2.5? There's a chance of everything. Sure. There is some non-zero probability that could happen. No matter what future you can think of, there is some non-zero probability that future will occur. It just, in anything that's probabilistic, you can calculate the probabilities, but then there's always the level of intuition and experience that goes into that says, well, those probabilities are based on what we think today. How do we think things are going to unfold? If we project things into the future and think about a future scenario, what would the decision tree look like in the future? What probabilities would be increased or decreased in the future? So I sort of think about it that way. But sure, I mean, you could get rates to come down to 2.5 or 3% and stay there. You could. What risk should I consider when lending shares for my buy and hold portfolio? None. My broker recommends this, but I'm unsure about the potential dangers. Are you in the US? Are you in any developed market? If you are, there's no danger. There's no danger. What is the rationale for being short the S&P versus something like QQQ? S&P is it's sort of considered the market So we expect it to have a beta of 1. So it becomes easier if you're hedging out the beta in your portfolio, it becomes easier when you're dealing with a security that has a beta of 1. It's just for ease of use and probably liquidity, but mostly for ease of use. I wanted to ask if there is some way by which we can infer futures instruments moves using volatility surface smiles. Inferring future movements using nothing but well, that all that comes from pricing information. As the price provides a return, especially in options, based on where the price is, you'll get an implied volatility. So what you're asking is, can you use technical analysis to predict the future? I mean, you are asking that because nothing there is fundamental. That's all technical stuff. So you're saying, does technical analysis work? No. Now you get some people that say, oh, no, it does work. I would challenge them to say, well, if you look at your returns for the risk level that you had, what's your Sharpe ratio? There's making money and then there's optimizing your return. Technical analysis might make money if you play with a whole bunch of tight stops. In other words, you make 50 bets a day where you're going to lose 10 cents on each trade, but make 25 cents. And 50% of your bets go wrong. Well, you lose 50 times 10 cents, but you make 50 times 25 cents. You make, very short-term money, the most inefficient form of income that you can make, because now it's income. Now a technical analyst will say, whoa, you don't necessarily have to be a day trader to use technicals. You could have a 6-month holding period as long as the technicals hold. But in the end, you are asking if technical analysis works. I'm the wrong person to ask because I think technical analysis is just a big pile of horseshit. So I'm going to go ahead and say no, I don't think so. Why not invest in crypto? I don't know how that's a segue from anything. Why not invest in crypto? What's that a segue from? Where's the last statement that you had? Why not invest in crypto? Well, listen, here's my argument for crypto. It's mostly for criminal activity. Will criminal activity continue? Yeah. So if I invest in crypto, what I'm doing is I'm going long criminal activity, is I'm making a bet on the need for criminals to continue to use it, and the difficulty that criminals will have in getting their money out of Bitcoin, which basically makes them long-term investors. So is the growth in crypto held by criminals greater than the growth in crypto introduced by mining? And if it is, well, you're going to have a supply squeeze, which means the price will probably have to go up. But let's make no mistake about it. I'm not looking at it as anything but a criminal vehicle. And if I made a long bet on crypto, it would be because I think that most criminals will use this crypto, and there'll be a growth in assets under management by the criminal gangs that exceeds the growth in crypto from mining. Sure, I could also make money from porn, right? But why would I want to? Like, why would I want to bet on those greasy industries? Well, I seem to think that how you make your money is as important as how much you make. Why not make it in a way that at least you're contributing to something in society and not making criminals richer? If I buy crypto, I, in essence, am helping support the price of their assets, of these criminal organizations that flood drugs into your streets, that defraud your aunt or your grandmother out of hundreds of dollars, that defraud people all the time, that steal, that murder, that kill, that I mean, think about it. What are you doing? You're helping criminal gangs. Isn't there a better way to make money? You know, I don't know. I wouldn't touch crypto. And besides, how many people who ran the crypto exchanges are now in jail? That even they were criminals. Why would you want to get involved in this industry, right? Maybe a hobby, and if you're lucky, you can sell it for more if you still have the item. Have some guitars that will probably go up in value, but that's not why I own them. Typically with collectibles, it isn't why you own them, is that you have some affinity for what you're collecting. That's a nice thing about collectibles, is not only do they have an asset value and not only do they have an investment value, but they have a utility value, that you do derive utility in the very owning of them. There are some people who look at collectibles as the vehicle for investment, and there are some people who look at collectibles as, this is what I collect, and they do have some value. So it is a big industry. Collectibles are a huge industry. You can't just say, collectibles, I'm not going to pay attention to that. I mean, they are a big industry. Do you still think they will cut in June? Bank of Canada, I think so. The Fed, I don't know. Let's look at CPI and PCE this month, and let's look at what other central banks are doing. And I don't know that they want to be the last one standing. Been playing guitar since I was 9, and I got to know who your favorite guitar player is. That's a tough one. Probably Carlos Santana is if I had to pick one right now on the spot. I know a lot of people like to run and say Hendrix, but yeah, you have to have a particular ear to listen to Hendrix, I think. And sometimes you just want to break from that, because sometimes, but with Santana, I mean, I don't know that there's anything I listen to where I say, okay, I've had a little enough of this. I'd probably say Santana. Beatles fan, supposedly George Harrison is a distant cousin of mine. Well, he's even more distant now. Do you think long-dated treasuries are a good inversion? Well, I don't know what you mean by inversion, given the coming rate cuts. You mean a good investment? Yeah, I do. I don't know what you mean by inversion, but LAC, all types of reports that shares should rally back to over $5 since GM invests $650 million in the company. The company raised another $275 million at $5. I don't know what that is. So, is that a LiDAR company? Can you do a video on how to identify a cigar butt? That's a difficult one, right? What would be one that I would consider a cigar butt today? I mean, I have identified these in the past. Blockbuster, Barnes and Noble, Research in Motion. But I called Research in Motion that when they were at 130 a share. Their product cycle was simply just too long, and they didn't have enough money on their balance sheet. They only had $1 billion, so that was easy. Barnes and Noble, I remember saying, I don't even know why this company has any reason for existence. Barnes and Noble, I mean, come on. Today, what would be one that I would say has no reason for existence today? PayPal. I think PayPal, probably, given the fees that they charge, I would say, and given the payment systems that are coming into play, I would probably say PayPal is one of those that probably has no reason for existence. I think they've issued their own crypto. I think they've issued their own digital currency, a stable coin. I think. I don't know enough about PayPal to know, but I think I read somewhere they have their own stable coin. Yeah, okay. If it lowers the cost of transactions for the users, that's fine. But 4% transaction fee, come on. In today's digital world, come on, not going to survive. What else would be along those lines? I'd have to really think that one through. I think Beyond Meat probably has no reason for existence. Yeah, that's a good question. What we got? I remember at one point you linked a formula for how credit spreads affect equity pricing. Spreads up, equity down. Well, that makes sense, right? But I don't remember the formula or source any direction. Well, it's not really so much a formula. You can think about the cost of equity using a build-up method. It's going to be riskier than the riskiest debt that a company has. It would have to be, because even the riskiest debt sits above equity in any liquidation. So because it has a preferential right to the assets, the riskiest debt is still safer than the equity, always. So if credit spreads on a particular company are widening, the equity, that's saying that the debt is getting riskier, and debt is always less riskier than equity. So equity must, by definition, be getting even riskier. So it would be odd to see a company where credit spreads were widening and the equity was going up at the same time. There'd be a mispricing there somewhere, and that would be a sort of a quasi arbitrage opportunity, but it's capital structure arbitrage. But you certainly would do it, I think. Is you would buy the riskiest debt and sell the equity. And if the company went away, the riskiest debt might get something, but the equity would be wiped out. So, yeah, that's just typically the reason for that relationship. What luxury goods do you like to spend your money on? I don't have luxury goods. What luxury goods do I have? I drive a Ford pickup. Down here, I have an Audi, but it's not a high-end Audi. It's a Q5, I think I have. I don't like it. The most luxury items I buy are when I spend money on computer equipment. I don't go cheap. I will get the best Mac that I can. I buy the highest iPhones that I can. I buy the latest and the highest iPads that I can. If you consider those luxury items, but like watches, I don't wear watches ever. I got a watch right here. Oh, look at that. There's the time, 6:24. There's my Rolex, right? Now I have a mobile device that also acts as a watch. It also acts as a phone. It's a crazy little thing. I don't think I spend money on luxury. Here's the one thing I do. When I buy something, I buy quality. So for my gym at home, maybe someday I'll show pictures of it. I buy quality. I don't buy the Canadian Tire stuff or the home gym stuff. It's York. It's hammer strength. It's the stuff you'll find in a gym. Period. I don't buy cheap. I buy quality, because then you only have to buy it once. You buy cheap, you got to buy it again and again and again and again and again. But you buy quality, you only have to buy it once. But luxury, it's not my thing. Well, I guess the house I'm in, I guess you could call that a luxury item. I mean, at the price that I paid. I'm not into fashion. I know it's hard to tell, but I'm not really into fashion. I don't drink alcohol, so it's not like I, buy high-end foods or high-end wines or high-end liquors. No, I don't think I buy anything luxury at all. How would one make a trade based on correlations? For example, two stocks having greater correlation than historical average. Have you ever done a trade on correlation? So two stocks are trading in lockstep where typically they never have before. So one of them is mispriced. Which one though? Is the more valuable one acting like the cheaper one, or is the cheaper one acting like the more valuable one? It's like, well, okay, you got a correlation, but which direction do you go in? The most common trade for correlations is based on either multiples or spreads. So if we think about it in terms of spreads, I have done that before, where the spread between, let's say, two commodities is usually a fixed amount, but that they'll trade in different ranges from that spread. Well, there's a trade there. Multiples, for the longest time, natural gas used to be 1/10 the cost of oil, but that fell apart with shale. For the longest time, silver was 1/50th the price of gold. Now it's like 1/100th the price of gold. That fell apart. Is that going to return to its previous relationship? Probably not. It's deviated from that for, what are we going on, 15 years now? Same with oil and natural gas. It's deviated from that for 15 years. That if oil was $80 a barrel, you'd expect natural gas to be $8. That's gone. So not really. Not really. Not well. I mean, it's not really. Not right now. I can't identify anything right now. Non-finance related question, but we're asking, what do you think contributes most to a disciplined lifestyle? A lot of the focus on discipline. Why do you want a disciplined lifestyle? Like, let me rephrase that. Why do you want to start from the word discipline and then from the word discipline create your lifestyle? Why not create your lifestyle, which will create discipline? So, for example, go to the gym, you start getting gains, you start noticing you're lifting more, you're getting stronger, you're going to want to go back. Isn't that discipline? Isn't the motivation to do it creating the discipline within you? You start your morning with a tea or a coffee and the morning news, and you do that for half an hour every morning because that's a great way to wake up, and you kind of look forward to that. Well, isn't that discipline? Isn't doing what you want to do and wanting to do it the very discipline you're looking to add to your life? So isn't discipline an outcome? I don't know why you'd want to make it primary. As my goal is to have a life of discipline. Now, what shall I do? I mean, why not say, what is it that I want to do, and start doing those things? And as you do them and you progress and you get better, you will create discipline. Let me give you an example. Have you ever had a TV show that you really liked? You really liked. And did you watch all the episodes? Well, there's discipline. You didn't say, I need discipline in my TV watching, right? You liked something and it created discipline. So don't start with discipline, end with it. Discipline is something that will simply show up. Here's the thing. If you have no discipline in something, it's probably because you're just not motivated to do it, which means you have to discipline yourself to do it. And if you're not motivated to do it, well, you have to think about the choices you're making, because the choices you make will create it within you. There's I guess, I don't know, the best answer I can have for you. What's your favorite CFA topic? Anything with numbers. Anything with numbers and anything that's challenging. So fixed income, derivatives, quant, anything with numbers. Level 2 equity has a lot of numbers, but it's not challenging. It's not hard. It's easy. It really is easy. It's just, it's long and it's It just seems to have formula after formula, but they're not hard. They're so easy. The harder it is, the more I like it. The more rigorous it is, the more I like it. I love solving puzzles. And a puzzle is not me looking at the screen going, what the hell are they saying? A puzzle is, I see what you're saying. How the hell am I going to tell other people? How am I going to get someone who's never seen this before to get it the first time? How do I break this down? That's not an easy task, is to find the simplicity in things and to teach to the simplicity, because some things are complicated and some things are complex. I love puzzles, which is why I've always been drawn to philosophy, because it is a puzzle. It's a puzzle of the mind to solve. What's the author saying? And what are all the directions you can go? And how would you refute this point? And how would you refute that? How can you use this to refute another point over here? It's just one big, beautiful, giant puzzle. What I don't like is sloppy writing, is reading authors where I have to first fix their work before I can even do anything with it. I don't like people who don't know what they're talking about. I don't need people to agree with absolutely everything that I believe. I've listened to lectures on topics that I don't buy into, but if they're done by somebody who's good, I don't mind listening to it. What I don't want to listen to is somebody who doesn't really understand what they're talking about. So sociologists who want to chime in on economic issues, it's like, I don't have patience for you because you know nothing about what you're talking about. So with CFAI, I would say that the topics I like the best are the topics that were written and the readings that were written years ago. And the ones I like the least are the ones that are written most recently, only because there has been a trend in the content to take out the technical details, which is what it's referred to. Let's take out the technical details. I call it dumbing it down, but it's take out the technical details. And in dumbing it down, introducing even more errors. It's unsatisfying. It is the thing, I would say, that has had the greatest impact on me deciding that I really don't want to keep doing this any longer. And I don't. I really do feel that I'm near the end of what I want to do in the CFAI space for that, simply because of the disappointment and the lack of, I find myself looking for challenges because I'm not challenged anymore by the content. I find myself going out looking for difficult things to do, looking for problems to solve, for puzzles to fix. When you start doing that, it's kind of a signal, right? Yeah, so I think I've answered that as far as CFA topic. How do you select a particular stock? What's your screening criterion? How do you set a selling target? Well, you can't really select a stock until you actually analyze a stock. And there is no wasted time here. Every stock you analyze will go into one of three buckets: buy, sell, or hold. A buy is a buy. A sell, I kind of just ignore. I don't really like to have a lot of short positions. I don't mind short positions, but I don't like a lot of short positions. And a hold is excellent for selling puts. So when I did the understanding telecom industry, I was very happy to find AT&T. As I was going through the statements, I thought, this thing is pretty cheap, and it's a pretty good value. It's just not going anywhere. Excellent. Let's sell those $17 puts. And as of Friday, I have $16 puts and $17 puts. We got 5 days left. The $16 puts I'll make money on. Those will expire, and I'll make everything on those. The $17 puts, I think I only have 50 of them. I had 100 of the 16s, 50 of the 17s. I got 70 cents for the 17s when I sold them. I don't see the stock dropping to $16.30 by Friday. I'm going to make money on those. I think it's a fantastic vehicle to generate money on. So if you want to find a stock, just pick one at random and take 2 weeks and really get to know it and decide what bucket does this go in, buy, sell, or hold. If you think it's got a good story, well, then start by selling 20 Delta puts. See what that does for you. And just go from there. But just keep in mind when you're reading a company's 10K, very rarely in the 10K do they say, we suck. God damn, we suck. We can't get anything done. We're terrible at this. No, it will always be in terms of progress and how they're moving towards their goal. So you got to take it with a grain of salt. You can't believe, and especially their investor presentations will always look good. No company ever says we suck. Would miners generally do better than the metal in a falling rate environment? The big ones, yeah. In a falling rate environment, I was thinking a falling price environment, a falling rate environment. The idea behind commodities, excuse me, I don't know what's wrong with my voice tonight. The idea behind commodities is that they generally have a low correlation with equities, which is why they're a source of diversification. So I don't know that falling rates would be supportive of commodity prices if you had an industry, let's say, of balanced supply and demand, and rates were coming down, unless there was some belief that lower rates would increase demand. I'm not sure that it would that it would have a support, offer support for the price. But it would. Every company has some duration, has some sensitivity to interest rates. It would affect companies more, but it's hard to tell whether it would affect it to the upside or downside. Would dropping rates create more supply for things like, for asset intensive industries? It is possible that it might. For other types of industries, cash crops, let's say, the grains, there's probably very little correlation between the interest rate and the commodity price. So I think there'd probably be less correlation between the interest rate and the company price. Hang on a second here. Okay. I don't know if that's going to help. Where we want to ask about specific stocks, specifically the fundamentals of the company and valuation relative to its current price. However, it's a small, thinly traded company and wouldn't want it to seem like I'm trying to manipulate the price. You wouldn't want to look at the company, would you? Well, it depends. If it's a company in a space that I'm interested in, or if it's something like, well, it's a uranium miner. I know nothing about that. I probably wouldn't spend much time going anywhere on it other than saying, okay, well, I know nothing about this, and I just don't feel like doing a 2-week to 3-week deep dive on the uranium industry to assess this one. I just don't feel like it. So probably not. Well, I mean, other than conversationally, like, well, what company is it? Tell me what industry it's in or what sub-industry it's in. I'll tell you if I'd be interested. Study the effect on the acquirer's performance and market value post-merger. What statistical methodology do you think are best? The effect of the acquirer's performance and market value. I don't know. So I see some problems in pulling that apart. Is you would have to control for quite a few things, and I'm not sure if the types of studies you're listing would do that. I don't know. On that one, I don't know the answer to. How challenging do you really think the CFA program is versus other programs in accounting and finance? Well, there really aren't that many in finance. You've got CAIA and FRM. FRM is more for corporate finance, we'll say. CAIA, alternative investments. CFA is still probably the most challenging exam in finance. But if we put vintage years on it, which I think is going to matter. I think there's going to be a difference between saying the vintage year of my CFA is 2023 and somebody saying my vintage year is 2028. I seem to think that I would put a lot more weight on 2023 than 2028, given the direction that I'm seeing right now. I think that the vintage year would probably matter. But if we're looking at vintage years, 2018, 2019 over 2020, 2025 for, let's say, level one, I'd say, 2018-19 was probably more rigorous and more difficult than 2025. I'd put more weighting on that one as being more rigorous, but still the 2025 CFA in the finance space is probably still the most difficult finance exam there is. I just think that somebody who passes in 2025, it's not a given they would have passed in 2019 or 2018. That's not a given. Not sure if you answered this, but do you have any comments on the new L3 pathways? You're kidding, right? You're going to want to look at my channel. And I did put a video up, which open for 2025 registration. Stick with the portfolio management pathway. And you'll have my opinions of the two pathways. If you went back in time 50 or 100 years, how would you prove to these people that you are from the future? So this is an interesting story. I think this was something that was, I think it was in Brothers Karamazov from Dostoevsky, that if Jesus did come back, he would have been arrested by the Inquisition. And the way the story folded out is that he would have been he wouldn't have been believed, and even if the Grand Inquisitor did believe him, the Grand Inquisitor would request that he go away, that he be silent, that he not do anything about it. Now I can't remember how the whole thing went, but it was sort of that analysis that even if he came back, who would believe him? So if you were from the future, how could you prove to somebody that you were from the future? Is you would then say, okay, the World Series next week, here's who the winner is going to be. So-and-so is going to be shot on this particular day. This is going to happen over here, and this person's going to utter these words. You'd have to know something about history to be able to demonstrate it. That's an odd question. Do you have somebody that's trying to convince you they're from the future right now? I would walk them to a hospital. The Japanese aren't doing that anymore. Oh, prior to World War II. Oh, I see what you're saying. Major changes to 24 and 25 curriculum. Can we use 2024 for 2025? For level 3, if you're doing the core curriculum, as I've said, 90% yeah. For level 1 and 2, no idea. Have you speak about ABR? Is ABR the largest reposition you hold? Nope. What's exit strategy do you have? I have no exit strategy on this one. I don't know when I would sell it. I don't know if I would. I've increased my position on ABR in the past and lowered and increased it and lowered it. But I've always had it. I don't see a reason why I would sell it at this point. I mean, there'd have to be some compelling reason on the horizon. I just don't have one. It's the longest one I've ever held, the longest of anything I've ever held. I have no plans I have no exit strategy yet. How come I haven't seen an update in this week of CFA video in a while? Oversaturation, oversupply. People can only watch so many things. When you start putting out more and more content, people will make a decision as to what they want to watch, because you can't watch everything. And I don't think that I'm the only thing that you look at. And everyone's putting out content. There just isn't the hours in the day to watch it all. So the views on them every week were going down. Well, that's a sign that, okay, well, nobody really wants this on a regular basis. So let it go. So you should be willing to try things, but you should also be willing to stop things very quickly if they're not going in the right direction. So, you look at your views the first week, the second week, the third week, the fourth week, the fifth week. Okay, it's going in the wrong. It's not finding its trend. The trend is down. You have to listen to the feedback. The feedback is based on views. It's like, look, we're busy. We got a lot of stuff going on. To check in once a week for another, it's too much. So that's why I don't do it anymore. I'm even seeing the same trend in the market outlook that very rarely do I exceed 10,000 views in a week. Very rarely. Although my subscriber count keeps going up, my views don't. I don't know, to subscribe and then say, I'm just not going to watch. Why subscribe to begin with? You see your subscriber count going up, but if you're not getting any extra engagement, then that number is meaningless if you're not getting the extra engagement. So I might change the focus of that. Eventually, the market outlook will be available only in the applied level. Not yet, though, but eventually it'll only be there. CFA level 2 PSM analyst skills looks identical to James Valentine's book, Best Practice for Equity Research Analysts. Wouldn't be surprised to learn he's the author of the module. Could be. On your weekly market outlooks, you discuss flows into out of TGA, MMs, reverse balances. There data to show where all the transfers go, like stocks, cash go. Is there data to show where all the transfers in out go to? No. TGA is the Treasury General Account. It does. The TGA does publish, not the TGA. The Treasury does publish transactions, so you can see exactly, what they're funding, how much money goes to what department, how much money's coming in, how much money's going out. You can see that on their data tab on treasury.gov. I don't know that banks will tell you what's going on when you see reserves change. I don't think mutual funds will tell you what's going on when the reverse repo changes. So not really. New level 3 paths aren't woke enough. I don't know why you'd have an organization that wants to jump on bandwagons, and jumping on bandwagons too late. Jumped on ESG bandwagon, I think, too late. jumping on the woke thing, I think, a little bit too late. And why jump on the buzzwords of the day? They are buzzwords of the day. Stick with the core. Stick with the finance curriculum. I mean, improve the curriculum each year as new securities and new types of investment vehicles come out, but at least stay away from all the buzzwords and the trends and the fads of the day. In 5 years, you'll find that almost no one will ever admit to being a wokist. No one will ever admit to it. It'll be one of those things like, the whole bunch of people were, but nobody I met ever was. But unfortunately, wokeism happened in a digital world. These wokists can't deny the things they said at some point in the future, and I think we've all sensible people have had just about enough of this nonsense. Why would you even want to jump on that bandwagon this late in the parade? Somewhat of a follow-up to the correlation question. Do you see the correlation between SPY and TLT being dragged back to the historical average? Which historical average? Pre-Great Financial Crisis or post-Great Financial Crisis, but pre-COVID? I'm not sure which historical average you're referring to. But as rates go down, TLT will go up, but it will also provide support for the market. So if that's the correlation you mean, positive correlation, probably. I think mosquitoes might be above humans on the food chain down there. Yeah, well, could be. I assume so, given your SPY and TLT positions. Yeah, it's definitely exciting to hear you're making a video on how to build Dad's wealth model from scratch. I think he should do it. I mean, he's in the best place to do it, and if he did it, I would feel no need to do what's already being done well. That's the point of doing secondary research before you do primary research. Is if somebody else has already done it well, why not just refer people to that? Why put your name on it if somebody else is just as good? I mean, I could build a model from scratch, but I've looked at his and I thought, this is good. This is good. I don't know that I could do better. I'm more than happy with it. And given his background and valuation, I will cede the crown to him on that one. I don't need to be the center stage on that one. I have no problem with other people's stuff if it's good. It would be nice if he then, rather than, because he presented it, he just said, here's the spreadsheet, you can download it, off you go. It would be nice if he did a multi-part series on, let's build this from scratch so that you can see all the steps that went into it and how I built it and all the decisions, so that if you wanted to tweak the spreadsheet itself, you could, rather than just tweaking the assumptions that I made. I would rather he do it, because it's just going to be time consuming. And if he did, job done. I'd say, here you go, job done. So if anyone has direct access to him, tell them, yeah, let's you do that, and I will direct people to you. Given the current U.S. debt level, how do you think young folks should plan for their retirement, assuming this debt would need to be paid at some point in the future, potentially by increasing taxes? What does it matter? What does it matter if the government's going to increase taxes? What are you going to do? Say, okay, well, I'm not going to make anything? Even if they increase taxes, you incrementally get something. You would have no choice but to continue on. You would have no choice. So I would say, look, taxes are going to be what taxes are going to be. At some point, you may have to make a decision about where you want to live and what tax regime you want to live within. The sooner you make that decision, the better it'll be for you. But taxes shouldn't change the goal of funding your retirement. You have no choice but to continue on. But you have your tax deferred accounts. Everything going in is tax-free. No matter how you make the money, it will all be taxed at your marginal tax rate on the way out. You can do something like that. Use your home, your primary home as the capital gains exemption on primary residence. There's a lot of value in doing that, in choosing. Don't necessarily choose the house that you want to live in. Choose the house that has the most potential for you to sell it at a gain 5 years later, and then move to the next one. And then think about, when you're 45, then I'll buy the house that I want to live in. So you can, because you can get all your gains tax free if it's your primary residence, and that's forever, no matter how many houses you live in, as long as it was your primary residence. You can start thinking about, well, how do I invest tax efficiently, but you're not going to escape taxes. And will there be more in the future? Yeah. Will they be higher in the future? Yeah. Will there be periods of time where they drop, depending on the politician in charge? But with democracies, one party comes in and reverses everything the other party does, and the next party wins and reverses everything that one does. So you've got this volatility and things that, who knows what the tax regime is going to be when you start pulling that stuff out. You have to just think past it. Option prices and probabilities reflect all the information. Market prices reflect everything according to their knowledge, according to their, well, I wouldn't say knowledge, interpretation. Prices reflect the interpretation of the information that is known. If I made a trade plan for myself, let's say 100K account, risk per trade is 1,000, and the SD came out to be around $900. What are your thoughts on this? I'm not following what you mean when you say risk per trade is 1,000. Standard deviation came out to 900. I'm not following what you mean by that. Will you be updating the applied level CFA modules for non-CFA? Will you be updating the applied level CFA modules for the non-CFA market enthusiasts? What are those? The applied level CFA modules for non-CFA. I don't know what you're referring to. Current is 2018. Oh, you mean within the, yeah, I did a whole bunch. I think I know what you mean. You're referring to a bunch of videos I had done applying CFA concepts years ago, before it was even an applied level that I was putting out there. I just called them applied CFA. No, I won't be updating those. They are what they are. I'm working my way out of CFA, not into it. The future for me is in the applied level, because there it can be correct and rigorous. And I do see at some point having some kind of designation around the sectors, a chartered sector analyst or something like that. I think that to go through something like that, to understand all 11 sectors and maybe 30 of the big sub industries, probably prepares you to be an analyst, at an informational level, as opposed to a process level, which is what CFA does. Here's some FSA, here's some discounted cash flow models, here's some free cash flow models. That's more process. But with all that process, when you start with a 10K, it's, well, how do I even come to understand this industry and the structure of the industry? I think there's a big space missing there, and I think that's the future, for me at least. Is there any chance to teach how to use interactive brokers in the applied series? I do. In the options module, I do. In the portfolio construction module, I do. I show you how to do treasury trades, how to do currency trades. I put it in. I don't have one module that says how to use IB, but I use IB throughout, so it's in there. Where are we? 7 o'clock. We've been at this. Okay, we'll go another 15 and we'll wrap it up because I want to go grab some sushi tonight. Assuming Trump wins the next election, how much control does he have as president to weaken, strengthen the dollar? It depends on how much, how he wins. What trades would you make if you knew Trump will weaken the dollar? First of all, he'll get rid of Yellen. If he's president, she's gone. He'll replace her with another Treasury Secretary that will be a loyalist. So he'll have power to get it done because he's already collecting people who agree to carry, who are already saying, yeah, I think you're right. Let's carry this out. Let's get this done. So he will put his own people in place. So yeah, he'll have power to get it done. Pretty sure wearing a flat brim hat lowers your IQ every time you put it on. I've heard that. I don't know Mark was so passionate about cap brims. Well, when I see a mistake being made, I got to call it out. Investors are often attracted to high dividend stocks like ABR, which could boost prices. Even if institutions are restricted on stock selection, wouldn't this still be appealing to retail investors? Well, I would be careful about chasing high dividend yield stocks. Not all of them are going to stay high dividend yield stocks. A lot of Canadian REITs, especially in the office space and the retail space, cut their dividend significantly. And their price fell accordingly. So just because something has a high dividend yield doesn't make it a good investment. It should be a good investment and it has a high dividend yield. But you wouldn't search for the highest dividend yield and say, let me see if this is a good stock. ABR is a good investment, I think. It's a challenging time, but I'm willing to buy more at these prices. And I like the dividend yield. Any bets on NVIDIA? No. Plan release for the applied level financial modeling beginning September. Best metrics to analyze a bank in the applied levels, in the sector studies, financials. I did a 5-part series on understanding banks. All in there. And there isn't just one metric, depending on what you're looking at. There's a 5-part video on looking at liquidity. That's important for a bank. On asset quality, that's important for a bank. So there's a whole bunch of different things you'd look at. Do you have a full position in FCX or will you wait for another pullback? Well, if FCX finishes over $50, half my position will be called away. I can wait for a pullback. FCX is with the combination of the price appreciation and the selling of the puts over time. FCX doesn't owe me any money. I've done very well on FCX. Same with Oxy. I've done very well. I'm sure I'll have an option to do something again when it finds a home for its price, some range that I can work with. Still planning to cover the coal industry? I think so. I think coal is in the mining industry. A lot of the stuff that we learned in understanding mining does apply to understanding coal, but it is a little bit different. Do you think estate taxes go up significantly in the next 10 years? Yes, I do. Being in another continent, would your sector studies still be relevant? Yes, they are. Or would I need to do my own sector studies? Nope, they would still be relevant because mining is global. Autos is global. Banking is global. Utilities are global. They may have different regulatory environments wherever they are, but they should operate pretty much the same. Lost where I was, so let me start from the bottom, work my way up. Ideas on the impact of buybacks on treasuries starting at the end of the month. I don't know that it's enough money to change much. It's off the run. Looking at off the run, not on the run. I just don't know that it's enough. If you didn't know about it, I don't think you'd notice it. Would you be open to doing consultation on government policy for a third world country? No, I would not. No, I would not. That is way beyond number one, my field of knowledge, and number two, my willingness to accept responsibility for. I think that anything that I would say would start with get rid of the corruption first, which is almost impossible to do without getting killed. It's almost impossible to do, but you cannot get out of a suboptimal equilibrium without getting rid of corruption first. You have to clean house. You need somebody who can get elected and who is willing, who can't be bought, who is willing to clean house. Very rare. Without being shot, without being killed, very rare to get done. Show me a third world country and I'll show you corruption. That's why they are where they are. I'll show you corruption. So no, I don't think that I would be willing to do that in the least. What are your thoughts on the VIX being traded at 13? Yeah, too early to conclude volatility subsided. It is low. What's the best book for technical analysis? I don't know any single one of them. Like, it's like asking me what's the best book for witchcraft. I don't know. Pick one. I mean, aren't they all just as crazy? Why is CFA not mentioning all the writers for all the modules they use? I don't know. I think because they're written by committee now, as opposed to one writer. I think I don't know. It's my best guess. They do feel like they have a committee feel to them. I don't really know. What is your outlook on wind turbine producers? I don't have an outlook on that. In order to reduce the all-in sustaining cost, mining companies sell some of their older mines. That will reduce the all-in sustaining cost for the company, but it doesn't change the all-in sustaining cost per mine. Interesting to know who would be willing to buy these, considering they're at the end of their productive life. They're not really at the end of their productive life. They're getting near the end of their productive life. They're just not corporate. They're just not profitable enough for the company, but they could be profitable for another producer that has the ability to lower costs, that may have technology that can lower costs, or to a private group that can still see value in it. Maybe it's enough for them. So there could still be value in it. Let's see. Let's just go somewhere in the middle. Right up here. Let me answer 3 or 4 more. Already did that. Already answered those. Just started a summer internship at a Canadian asset management firm, specifically in their commercial mortgages division. Any good resources for this industry? Commercial, yeah, so that differs dramatically between Canada and the US. For commercial, they're big, they're lumpy. They're not like residential mortgages. You almost have to do due diligence on each loan. So a good understanding of the commercial real estate spaces, office versus industrial versus retail, I think is probably the best place to be, versus, let's say, multifamily. That's commercial. Just in the beginning of my 3rd year of finance, without a completed finance degree, can someone grasp the applied series? Oh, yes. Oh, yes. Thoughts on student debt crisis in America? Okay, so when you ask me that question, you're asking me to agree on the word crisis. So instead of asking me thoughts on student debt in America, you've already thrown in the word crisis. I already know where you're coming from. And you're asking me to answer the question by first agreeing on the word crisis. I don't know if I agree on the word crisis. enough to pose economic risk. Thoughts on those advocating to discharge this debt by reallocating other parts of the government budget to cover it? So I sort of disagree with the taxpayer picking up the tab for debt that somebody else incurred. I understand the argument that, oh, well, hang on a second, the government was promoting some of this stuff and some of the stuff was fraudulent and wasn't leading anywhere or doing anything. Well, I still don't see it as the taxpayer's problem, and I think the government could claim sovereign immunity from anything they did. If it was financially you felt it was fraudulent, well, the government should be able to say, well, we can't make all the taxpayers responsible. We have sovereign immunity, tough shit. If some of the for-profit schools were fraudulent, then go after them, go after the directors, go after the owners, go after the shareholders, go after their assets, go after their houses, go after them, go after the ones that actually got the money from it. But to continually layer on more and more debt for the taxpayer, private debt, and to make it public, why stop there? Why stop at student debt? Why not find people who have credit card debt because they need credit cards to get by? Why not forgive that portion? Why not forgive mortgages of people who are about to default, they can't afford their mortgage? Why not come and forgive some of that? Why just the student debt? Why just that debt? Why not anybody with a debt problem? Why not anybody who has debt to say, well, forgive my debt too, and I'll go spend that money in the mall? I mean, you could make that same argument. If you don't forgive student debt, they're going to have to pay it back, and they won't spend that money in the mall. Well, if I got to pay my mortgage and my car loan and my credit card, I'm not spending that in the mall. Forgive my debt. Why not mine? I don't agree with socializing private debt. You took out the debt. You took it out. You made your own decision. You made a decision to say, oh, well, it was fraudulent. It's like, well, then maybe everybody who falls victim to a scam, society, the taxpayer should give them their money back. We don't say that. We don't say that, and that's clearly a scam. Somebody loses $10,000 to a romance scam. We don't say, oh, don't worry, the government's going to give it back. The taxpayer loves doing this kind of stuff. We don't do that, right? So why is it that we want to reserve it only for education? That, oh, well, you think you got scammed in education, you shouldn't have to pay your debt. Well, then if you're going to do that, you need to give everybody their money back that lost money on online scams. You need to, because that was a scam. The person made a decision. I don't agree with socializing the costs, the downside of private decisions. I don't agree with it. I know you once mentioned your favorite white wine when you used to drink. What was it? It was a Sauvignon Blanc, Girard, Girard, Napa Valley. It was excellent. Have you ever listened to Dave Matthews? Dave Matthews Band? Oh my God, 20 years ago? Any opinions? It was all right. Thought you'd like the song Dreaming Tree. It's an interesting song. It's written in a 7/8 time signature. Okay. I don't know what that means, but okay. Canadian telcos. I don't know enough about Canadian telcos. Yields are high. Stocks are battered. Would you buy with a long time horizon? How safe is BCE dividend? I can't answer that. Would you consider doing Alfred Lord Tennyson's Ulysses? Oof. I was thinking that I wasn't going to do a poem so much. I was thinking that the next thing I would do, because I've been asked for this a couple of times, is an analysis of Notes from the Underground, which is useful and useless at the same time. It's hard, not hard to understand, but it's hard to accept. It's hard to listen to, especially if you see within yourself that you are this person. It's hard. The problem with this one is it's a person you don't want to be. This is someone you don't want to be. So there is some value in saying, okay, well, what do I not want to be? If you are this person, you would not recognize you are this person. That's the curse of this person, is for 20 years of their life, they didn't recognize that they were this person till later in life. They said, look at what I am, right? I've turned into this spiteful person, which then later says I'm not a spiteful person. But you get there from a mindset that if you have this mindset, there's no way I could convince you that you have this mindset. You are destined to be this person. There's nothing I can do to help you. And if you are afraid of this person, you will never be this person, because you already recognize that you're afraid of this person. It's when you don't recognize that you should be afraid of this person, you already are that person. So if we go through it and you go, I don't get it. Sorry, but this is sort of a look ahead to what your life might be like. It's Dostoevsky was a psychological. His writing was referred to in his novels as the psychological novel, and it was really, each of his characters were an exploration of some facet of psychology. I'm no psychology expert, but I am an expert, we can say, in the experience of life. I've seen a lot. I've lived a lot. I mean, that's the thing. I am not this person, because there's one line in there. When I do it, I'll point out the one line, which I don't think gets enough attention, but I've never settled down. And you'd have to read the line to understand what that means, because he says, I used to live here, but now I've settled in. What a terrible line to have to be able to say. What a terrible point in life to come to. But listen, every professor at the start of every semester has 2, 3, 4 of these people. If you got a class of 30, you've got 2, 3, 4 of these people in the class, and you can recognize them on the first day. You can recognize these people on the first day, and you know that they will be one of these people. I find it interesting that Dostoevsky says that these people do exist, but he also says they must exist in society. I've never come to why. I've not come to that conclusion of why must they exist, though. I get that they do exist, but why must they exist? And he says, by necessity, they must exist. I don't know. I still think that one through. I'm not sure, but I was going to do that one. It's not long. It is disturbing. If you wake up one day and you realize that you are this person. Unfortunately, it's advice that cannot be given, because if you are this person, it is advice you will not recognize and you will not take, because you will not see that it's you. You will not see that it's you. And if you think it's you, it's not, because you have the wherewithal to be afraid of this person. And because you do, it cannot be you. Even though you might think that's who you are. It's not that you think that's who you are. It's you are afraid of being that person. That in itself is enough. It's when you're not afraid of it, that's when you should be very afraid. It's anytime you want to explore the psychology and really start looking inwards at yourself and being honest with what you see inside, it can be disturbing. Like it's not for everybody. Not everybody has the fiber within them to really explore who they are, because they might not like what they see looking back at them. And what do you do? What do you do at that point? You got to make peace with that, or you got to live with that somehow. And within you is, it can be, rewarding, but it could also drag you down. If you're already low, it could drag you even deeper. Sometimes these are dangerous journeys to go on, right? Same with Nietzsche. Nietzsche himself, I think in one of his writings, said that what he talks about is dangerous, and if you're not ready, if you haven't got the right mindset, this stuff is going to be extremely dangerous for you. And it can be dangerous because it's not physically dangerous. Physical danger you can overcome, and you can overcome physical wounds, but psychological danger and psychological wounds, those can mess you up. But it is good, I think, to get to know this guy when you're 20, and to be able to recognize this person when you're 20. And much like the underground man, he says, I'm 40 now, and I started this journey when I was 20. I've been doing this for 20 years. It is usually around 20 where these, I think it was probably pretty good, where you really start to see this type of behavior come out in a person. Because as a teenager, you don't know whether they're going to, grow out of that phase. But if you've grown up in a particular phase, this can mess you up for life. So I was going to do that. I'm not sure if anybody is up for that kind of thing. So any plans on Thus Spoke Zarathustra? That's a long one. That's a deep one. Before I do that one, I would have to present some other thoughts, because it's told in a sort of, it tries to tell it in almost a biblical sense. It's by analogy, and if you don't get it, you're not going to get it. So you'd almost have to kind of know what he's thinking and where he's going before you get there. So there's a lead in. It's certainly not first year material, if we want to put it that way. But Notes from the Underground can be. You can start from there, although it is, I guess without somebody else to fall back on as a safety net, some other thinkers to fall back on as a safety net, he could be dangerous. So what keeps you from total nihilism about the world? Oh, because I take action. I don't wait for life to happen to me. You can't be a nihilist when you're an entrepreneur. You can't be a nihilist when you're a person of action. You can't be a nihilist when you create and do things. Nihilism comes from resignation, comes from learned helplessness. That's how you come to that. But when you act in the world and you create something and you create your future, it's hard to be a nihilist. I think anybody who goes to the gym, it would be hard for them to be a nihilist if they're making progress, because they can see the outcome and the output of their input. Obviously, the world works for them, right? So it's hard to be a nihilist when you don't have to be an optimist. You can be a pessimist, which I typically lean towards pessimism, but because I can create a future that I want, it's hard to be a nihilist, right? The underground man probably is a nihilist. And I think that nihilism comes out of a sort of a self-defeatist attitude. How else can it come about? All right. I'm going to get going here because I do want to eat. And I think that place closes at 9, so I want to get to it. Anyways, that's it for the night. I will see you guys next week. Ciao.